Hello and welcome to Play PKN, the weekly video bulletin of the top news stories on PKN Packaging News, Australia's media hub for the packaging industry. I'm PKN's publisher, Lindy Hewson, and this week's bulletin is brought to you by Ball & Doggett, Australia's largest distributor of printable materials and consumables. Well, it is annual results season, and the major packaging groups Amcor, Orora and Pact have all released their figures for the financial year ending 30 June, and it is mostly good news. Global packaging juggernaut Amcor says it will continue with strong growth in the new financial year, after reporting upticks in all its figures for the 2022 year, with the fourth quarter the best of all. The company said it was an outstanding year, with CEO Ron Delia cheering investors by saying it would be the same again in the year to come. For the year just gone, net sales were up by 13% to $14.5 billion, while EBITDA rose by 4% to $2.1 billion. The company pushed through price rises of 12% in the year as costs including resin, plastic films and aluminium prices soared. Amcor expects to spend between 4 and 5% on its sales revenue on capex in the coming year, and is looking at further acquisitions and has just increased its stake in global digital flexibles producer Pact. Shareholders were celebrating the result with earnings per share up by 11%, a figure Delia says will be emulated in this financial year. Then Orora's Australasian packaging operation delivered what the company said was a robust result for the financial year, with glass finding new markets following the Chinese wine ban and cans showing improved volumes. But it was in the US where the big growth took place. The company achieved what it said were solid earnings in Australasia, with EBIT in line with forecast and broadly flat, while its US operation saw EBIT surge by 36% and sales rise by 17.7%. Brian Lowe, MD and CEO, said Orora's strong result for the fiscal year 2022 was reflective of the disciplined execution of the company's strategic priorities in the face of global supply chain and inflationary challenges. Australasian revenue was up by 9% to $909 million, mainly attributable to higher aluminium costs for its cans that have been passed through to customers. Without the price rises, revenue was up by 1.5%. The Orora Group earnings are expected to be higher in the coming year, reflecting what the company says is the resilience of the business, and in what it says is expected to be a challenging year of economic conditions. No surprises there. Now, Pact Group achieved 4% revenue growth in the year, driven by solid demand for sustainable packaging and recycling products, but reportable net profit after tax slumped by 86% on soaring input costs. Sales overall were $1.84 billion. Underlying EBIT was down by 15% to $156 million. Underlying net profit after tax was down by a quarter to $70 million, while reported net profit after tax fell to $12 million, down from $88 million last year. It has been a challenging year for Pact Group as a packaging manufacturer supplying the FMCG sector. The effects of a pandemic-strapped economy have been compounded by soaring labor and input costs, notably plastic resin, and supply chain issues as well. MD and CEO Sanjay Dayal said it's likely that these conditions will continue until Christmas, with signs of stabilization expected in the new year, although he notes that prices of resin will likely stabilize at an elevated level. He is buoyed about the strategic direction of the company, however. All three companies have made much of their sustainability efforts during the 12 months due, which was encouraging to see, especially in view of the national packaging targets and also legislated plastic bans. And then on that note, supermarket giant Coles is said to be removing produce bags in ACT supermarkets in a trial that starts next month. These barrier bags will be removed from all 12 stores across the ACT from 14 of September. The initiative is expected to reduce about 11 tons of plastic each year. In preparation for the 2 weeks prior to the trial, which are the first 2 weeks of September, customers who spend $5 or more in-store on fruit and veggies will receive a free 3-pack of reusable mesh fresh produce bags made with 90% recycled materials. Then from bags to berries, Pinata Farm's Sunshine Coast facility is launching supply chain and packaging innovations, presenting Australian strawberries in heat-sealed punnets and rolling out a refreshed branding presence. Its packing shed innovations include the addition of a quick chill cool room, modifications to bench assembly, customization of a heat sealing machine to accommodate 3 different punnet sizes, and installation of a new conveyor. Well, that's the wrap from me this week. For more on these and other stories, head to the PKN Packaging News website. That's packagingnews.com.au. Thanks for watching.